Good morning, everyone, and welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, the MegaETH public sale market, which we talked about yesterday, which we're going to talk about today again as well. Luckily, going to have Brett with me to break down some of the things going on there. And loaded up for discussion today, we have, apart from the MegaETH public sale, stocks and crypto bouncing as Trump and President Xi agreed to meet on October 30th, and Fidelity allowing customers to buy Solana. And they have formulated their explainer and breakdown of why they think Solana is interesting. Definitely want to get into that to see what an institutional's read on Solana is. Also got latest on price action on crypto and NFTs as usual. I am joined by Brett as my co-host today. We're almost ready to get into it. But before we do that, just a reminder, friends, that nothing that we say on this show is financial advice. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Brett, how are you doing on this Friday? Can you imagine it's a pretty intense week for you?
Hey, buddy. Yeah. Even though I missed our show yesterday, but I was on the road hitting a bunch of friends, lots of questions, a few shows I was on with Coffee and Captain just after us. It's been intense. The reception's been good, which is awesome for us, but now we just got to stick to landing. And we have more stuff to deliver. We'll talk about that today. So another, semi-announcement coming out in 2 hours.
I like that the modern market has become the place where you tease the announcements of an announcement and give us a bit of alpha.
Yeah, you guys have access to me. It's a little weird because it's like a little before. So I've seen people clip some of this stuff and talk about stuff. So I view as like you and me in the audience are like inner circle, like bro talking, doing stuff. But like I'm scared to like amplify too much outside of that. So it's a fun dance though. I want to give you guys access to the team.
Yeah, it is a fine balance, right? That you have to that you want to walk there, because something is going to get clipped from the modern market and goes out before your official announcement goes out. You obviously don't want to amplify that for that to be the one that goes viral, because you want that to come obviously from your own channels. CVX Crypto in the YouTube comments saying, "Can you stop hyping Mega? Leave some for us."
And I'm starting to see some of that. I was just addressing or reading some stuff from the overnight. I literally just woke up, so now I catch up on the last 6-7 hours of tweets that I've missed. It's a balance. People are saying it's gonna be really, really, really oversubscribed. We have we won't know until we actually see it. I know I'm addressing a lot of inbound. I'm customer support 24/7 these days, so we hope for the best, and we know it's going to be, people are going to be upset because we're not going to give everyone what they want if that is the case where it's super oversubscribed, but we're going to do our best, so we'll see.
Alrighty. Look, then we have a ton of things to discuss today, and we're almost ready to get into it. But before I get into the price action, pleased to announce that we are sponsored by Yeet. Today, the crypto casino that has done more than 700 million in volume since it has been founded 6 months ago by trusted names like Mando, KBM, and pro poker player Ben Lam. Mando came on the show to talk about everything they're doing. We are users of Yeet itself, me in particular being Limbo GCR over there. Just a reminder that to only gamble for fun and what you're comfortable with. And what we are going to do towards the end of the show is our giveaway, $500 to someone who has been signed up using the Modern Market referral and is on our Yeet board. We're going to do that wheel of name spin, which I enjoy doing quite a lot towards the end of the show to have a little bit of gamble before we close up for the weekend. But now it is time to get into the show. Bringing the price action up on screen. The window size looks horrible again. Let me adjust it real quick. There we go. It is a green day in the markets. We have Bitcoin being up 1.5% at 111K. ETH is up 2% at 3.95K, getting closer to 4K again. BNB is up 2.5%, 1.1K. Kind of expected to see more from BNB after the CZ pardon. To be honest, kind of was thinking that it's gonna run more on that. Solana up 1.75%, $191 there. Hyperliquid up 0.8%, almost back at $40. Still a very strong week for Hyperliquid, though, up 15% on the week. That was on a couple of news, including the S1 SEC filing, including being listed on Robinhood. So quite some bullish listing action for Hyperliquid. And last but not least, Sui up 6% on the week, up 0.4% on the day at $2.47. Getting in to the meme side of things. There we go. Also quite a green day. Doge is up 1%, Chip is up 1.5%, Pepe up 3%, Pengu up 0.6%, Bonk is up 3.18%, Trump is up 1.5%, SPX, Moritz coin up 6% on the day. Filecoin is up 10%, but still, oh my God, Filecoin is still down a lot at 37 cents. ApeCoin had a bit of a rally, up 20%, probably with something to do coming out of ApeFest. Just scrolling through all of that to see if anything is standing out. Yet again, Rebita by Virtuals up another 11%, up 64% on the week, trading at a $370 million market cap. And yeah, I mean, CZ's meme not CZ's meme, but a CZ related, lore related meme is up 32% on the day at 11 cents, almost 12 cents. That is doing quite well too. But apart from that, there is nothing to report. Anything from the price action you want to comment on, Brad, or should I go on with my headline overview?
Yeah, let's keep rolling.
Alrighty, let's do it. As we said, top of the show, we have stocks and crypto bouncing as the first piece of news on the announcement that President Trump, President Xi are going to meet on October 30th. We're going to then get into MegaETH's announcement of explaining some of the token utility. And last but not least, I want to look at Fidelity after they allowed the brokerage customers to trade Solana on how they are formulating what Solana is, why they think it is interesting to get this institutional point of view in. But before we do that, let's also take a look at the NFT price action. Pudgies are continuing to slide down, have fallen under a 7 ETH floor now at 6.94 ETH, down another 2%, down 7.5% on the week. GLHFRS, good luck, have fun, are up 60% on the day, 123% on the week, to do with the token works strategy. Bored Apes have a bit of a green day, up 1%, 7.2 ETH floor.
And I'm surprised the token work stuff still has an impact. Like I'm looking at, I unfortunately looked at one of my bags from a Solana token strategy, and that one is down horrendous. It got slaughtered over there. So I'm surprised it still got some energy to it.
Yeah, I feel like there's still projects trying to figure out how to use it and how to create a more sustainable flywheel around that. The Vibe stuff maybe did a bit better with that, but I feel like nobody has yet figured out a way to keep that alive for longer than a week or so.
Flywheel is a dangerous word. I did see I was walking at the Moonbirds. Do we know if we're gonna get our shit for that? Because like we bought the collectible, right? And I saw recently there was another initiative that they were doing, a Soulbound, I think it was. Yeah.
They did extend the claim deadline, I think, for the Soulbound, but I don't think that this.
What was it again? What was it for?
I think it was for actual Moonbirds for the NFT holders. It wasn't for the collectible.
Yeah, I assume. I just knew that they were doing something, and it seemed like something that would be targeted for like burb allocation whenever they did it. I'm trying to like loosely in my head. I know they said soon-ish, like what, 2 weeks ago, 3 weeks ago at this point. I don't know, just trying to mentally prepare and make sure I don't miss it.
Yeah, it's always going to be interesting to see how their token's going to do. It's probably the last major NFT collection which is yet to release a token, right?
Yeah, I can't really think of anyone. Goblin Town, maybe? I wouldn't consider them major anymore, but like they're still releasing stuff and having decent releases every now and then, like games and shit.
Yeah, they kind of adopted the token works token, so I wouldn't make
No.
the point that this was some sort of like TGE light for smaller tier projects.
Okay,
but yeah, we'll keep an eye on that.
Patiently.
We'll see how that is going. B certainly will also have an eye on that, given that he's an investor in Orange Cap Games. With that being said, let's take a look at the Web3 roundup to get you some of the news from the rest of the space, starting with President Trump pardoned Binance founder CZ because he, quote unquote, wasn't guilty and was persecuted by the Biden administration. Mentioned that at the top of the show. Obviously,
Did you see the Polymarket wallet tied to the tweeter, or not the tweeter, tied to the shorter on Hyperliquid?
what was going on there?
Bro, this guy's fucking out there. So like, one, and like now we can just keep tailing this person. I did the Occam's razor thing, and I was like, okay, the guy who shorted the announcement on Trump before the liquidation cascade was just a degenerate, and or someone who was like aware of like Chinese media, and they had talked about some of that stuff, like whatever about the really rare metal stuff 3 to 4 days before. So like he was just positioning for that and got lucky and whatever, came back to the casino, whatever. That wallet, who I thought was just a degen, totally decoupled from the Trump stuff and just like playing whatever, was linked to a Polymarket account called Big Winner One. And Big Winner One bought like, I think it was like, I don't know, like $40,000 worth of yes on CZ pardon. And then now obviously won big because that happened because he was pardoned before the deadline. So it's just like another data point that like maybe this wallet does have some inside information related to the Trump administration. And it's very frustrating to see these people that are just printing money. So like it's so blatant, assuming that like that's all true. So yeah, that's fun.
Yeah, obviously, we don't know whose wallet it is.
Yeah, they have one big position. It was that, and it hit.
I was just speculating on that, but yeah, clearly that is probably one of the risks in general with prediction markets. And we also had the conversation on mention markets on the show as well, right? That you will have people who find it worthwhile to exploit that, no matter the amount, no matter the amount of money that they have. I mean, talking about that, right? Did you see?
You said unfortunate. I just want to say that it's a feature, not a bug. Like it's gross to see it, but it is a feature, not a bug, right? It's like that is why it's considered something that is a truth-seeking vehicle, because you have MFers like that who are willing to, like, thinking through anonymity, they can come in and do this kind of stuff, and it will ultimately find like what the outcome will be, because there's money on the line and they care about money more than basically anything else. And then through that, we see truth.
Yeah, that is true. And no matter the amount of money that you have, for some people, it is not enough. And that is also true for, did you see this? Not crypto related, but I thought I want to put it in the snapshot. NBA stars and mafia among more than 30 arrested in illegal gambling by FBI. Here's what happened. There are 2 indictments. One is related to sports betting. One is related to alleged rigged illegal poker games. NBA stars, coaches, former players have been arrested as a result of that. I think also 3 mafia families, including the Gambino family, where members have been arrested as a result of that. Has been a massive crackdown with more than 30 people being arrested by the FBI.
So, okay, so I need to read the details of this, because if it's like I think there's 2 buckets. Like Pete Rose was a famous baseball player, one of the best to ever play the game, got shellacked and like didn't get all of his rewards because after playing, or like he was gambling like pretty heavily, but like not all of it was directly on his games. It was just like you can't gamble while you play, even though like he wasn't gambling on his games. And like, I have sympathy for people that, do that stuff even though it's not on their direct games. But if you're like directly found to be throwing games, like you're playing games and you're trying to dictate the outcome by like, whatever, giving up a turnover or something in a key situation, like that's fucked up. And that, I think, deserves some heavy scrutiny. But I would need to see if that's like the case. Like if it's like former coaches, like dudes are just like can't bet on basketball, even though it's a thing that they've loved and like have a immense knowledge on for their entire life. I sympathize with those people wanting to be able to play the game. And I think gambling just in general is like getting more and more normalized. Maybe their defense should be they were predicting and not gambling. They were predicting the end of the game. And that is why they shouldn't go to jail.
Yeah, I think it was also like the case with, I don't know who was involved in that, who basically, said he's going to be injured in that game and walking out pretending to be injured because there were lines on that as well. So there's been so many things
Okay,
going
that's a little,
out of
yeah,
that. Yeah.
yeah. If
Um,
you're
it's
feigning injury,
Yeah, and it's not only the betting side, then you also have the rigged poker games. Like we could spend maybe 20 minutes talking just about breaking down what's going on there. But yeah, definitely wanna catch up a bit on that and understand what's going on. But we're not gonna do that on this show today. What we're gonna do is we're gonna just continue with the rest of the roundup. Another piece of news, you are gonna like this one. Claynosaurz announced Ibu, a new entertainment platform, saying that they're redefining how entertainment is created, owned, and experienced. Then moving on to the Farcaster side of things, Farcaster announced that they are acquiring Clanker, the leading launch pad on base. You don't seem to be super happy with that news, Brett.
this is unfortunate for me as a top Rainbow wallet points holder. Rainbow put in a proposal something like a month ago of like trying to acquire Clanker. They've been talking about them for a while, and the Rainbow was trying to build this platform and do this stuff. And yeah, like that means they lost this bid and it went to Farcaster ultimately. Not awesome for what will be my free bags in the future is what I'm hoping. Unfortunate.
Gotcha. Well, there's nothing we can do about that.
Can I go back? So I'm going to talk my bags on the Hebo thing because like I actually didn't know they were announcing this stuff, but I knew directionally what they were trying to do because like this has been part of the theory or thesis of what they are building towards, right? So it's very hard to monetize and create IP that is worthwhile inside of, Web3 with tokens, whatever. But it is something that is appealing, right? Like there's a huge chasm between like the net new ideas for IP and from like designers, creators, people in the industry, and then having to launch a fully fledged Pixar movie. Like it takes incredible amount of money. Like there's no risk that it like appetite for investors to do that stuff. So you see a lot of things that are basically killed, and you see Minions 75, right? You see a rerun of IP that has been historically successful for the a millionth time because it's safer for the investors, and you just have like a huge chasm of like net new stuff. Claynosaurz teams it's from the industry. It's something that they believe like there's a huge appetite for, and they're trying to build up the model of like, look, you can do all of this stuff, you can build up core fans, you can build momentum, you can raise a little bit of money through doing the NFT stuff, and through that you can start with short form, which is like straight up images, to medium form, which is like GIFs, and then proliferate your IP and slowly grow and build up investor confidence and blah blah blah, stretch it into shows and then movies and then. So like, that's always been their theory. It's very similar to Doodles. But it's hard to just like have your singular IP, which is Claynosaurz in their case, and to like make that thing super valuable and drive value back to your holders and all that stuff. So one of their strategies since the early days, and I've been a holder for damn near 2 years now, is to create a platform for others to do it. Like they've successfully done it, which is hard to do. They're partnering with very prominent brands. They are stretching into shows. They are building a video game. They're doing all this stuff, and they did it successfully on small budget. And the reason, so like this is the first step in that. Like I wasn't aware they were dropping it today, so this is cool. I need to go read up on this. But the whole thing was that like we have done it. We should build this into a platform, into a model, and then allow for others to come through us to ultimately try to replicate what we've done, and therefore net new IPs have a chance to flourish again. And it'll come through us, it'll come through our tokens, it'll come through all of our stuff. So I need to go see what like the details of this actually are, but I'm very excited as a investor, I guess, frankly, that they're taking more steps in this. They're a very thoughtful team. Like that's there's very few things that I've been comfortable holding for this long. It's basically this, and then Forgotten Ruins, Wizard of Cold, which were like very similar. They're doing a game, they're doing IP, they're doing all that stuff. It's a tough hold for sure these days, but I have faith in them still. So excited to see it.
Yeah, appreciate the breakdown, and I think there is definitely a place to solve for some of these IP and IP creation related challenges. Two more things from the Web3 roundup. One of which Robinhood listed Hype, Solana, Cardano, XRP to its platform. And then the last piece of news from the roundup that's coming via Decrypt is a class action lawsuit against the Meteora founder, Benjamin Chow, saying that he was the center of the enterprise when it came to Melania and the what was the Argentinian token, Milei's token? Again, like Libra, that was the name.
Yeah.
So there's a new class action lawsuit that is filing that Benjamin Chow allegedly is the mastermind behind that, and that basically the other figures, Kelsier, etc., were just acting on his behest and were executing his master plan. Just wanted to bring that to the roundup as well. But with that being said, Brett, one more quick question. Any thoughts on anything else from the roundup? Anything you want to touch on, or shall we just get into the headlines?
No, I was like, your hype on Robinhood thing struck me, so I was going to look into some of my portfolio over there to see how stocks were doing. Yeah, most things are green, but they're all still under what they were like a week and a half ago, so nothing exciting.
Yeah, that is a perfect segue. You said it, most things are green. S&P 500 is green, up 0.6% on the day, still up 1.65% over the last 5 days. Did recover pretty strongly from the, I don't even want to call it a dip because it was down 75 points. But anyhow, it did recover from that. Crypto has recovered a bit as well. Most of that is to do, as we said at the top of the show, that Trump is to meet with China's Xi for the first time in his second term, in his second administration. That is going to happen on October 30th on the sidelines of the Asia Pacific Economic Cooperation, the APEC summit. Trump is saying, I think we're going to come out very well, and everyone's going to be very, very happy as a result of that. More analysts out of China, including someone from the Asia Group, a global consultancy, says this will be a high-risk, high-reward leaders meeting. Both sides will try to hit the reset button for a relationship rattled by the latest round of tit-for-tat restrictions, and also trying to avoid any big headline concessions. So both sides obviously trying to save face on that, and the market is hoping for some de-escalation.
Our bags thank you for avoiding the headlines. So yeah, please, more of this. At least for a little bit, man. Let us recover. Let me get out of this long position, I guess is probably what I'm trying to say. Brother, I'm climbing back. We're almost back to my levels. Just let me get out of this.
How's the trader arc going? Are you after this recovery and you get out, you will continue with it, or will you slow down a bit on that?
Well, so like now this reminds me of what happened to me with the Kaido position I had like 6 months ago, where I got into a long, got trapped in the long, it came back, got green, and then I was like, hey, you know what, I'll ride it for a little bit because like, it's finally green after all this time, and then it went deeply red again, and I got trapped. So like, I am not going to sit in this one longer. Once I am green again, and I'm actually aware, because it was green like a week ago on a God candle pump, and I missed it, the 15-minute window I could have got out. Once we're green again, which I know I will get green at some point, I'm going to get out of it. I'm going to chill for a sec. I want to like enter and exit new positions with fresh mind, with fresh perspective, with fresh thesis and everything. So we will resume the trader arc once that happens. I want to reset.
I had a call yesterday with Stats with Sam, and we were talking about Ace Trader coming out of the meme land ecosystem, and they have an interesting model which they're working on. Just basically, you pay. There's like 3 tiers. Cheapest one is $9 at the moment. You pay $9. You get a paper budget of like 20K to trade with. If you hit certain targets, like couple days of green P&L up 50%, not all of your gains coming from one single lucky shot, they will actually give you real money. In that case, I think 1K to trade with. They will close you out if you draw down 20% or 10%, something like that. But if you go to the upside and also fulfill some different criteria, you can keep like 80%-ish of the profits. So I kind of like this idea of allowing people to scratch the like herp trading gambling itch with a very capped downside of ultimately it's just $9 or $100 if you go for a bigger tier, which you put in.
Yeah, I wonder what the like. I feel like the downside of that is like not great. Like if you're going wide, obviously you're just giving 500 people 10 grand, and you're hoping that one of them pays out enough to like carry the rest. But like if you give all of them 5 grand, 10 grand, whatever, and they all go down 20%, yeah, you just got nuked like as the supporting ecosystem doing that stuff. So it's not very
It
sustainable.
depends
So
how many will graduate, right, from the initial like paper trading
yeah,
to the real trading fund. If
yeah, you
enough people
have
pay
pretty
up, then
good. Yeah, yeah,
that could
I like
make
it.
up for the drawdowns. Yeah.
It's in line with my general thought that like all of this stuff becomes just like a cultural, like trading itself becomes more normalized, more cultural, more sport like, and it's just like they're running a training camp. Like I totally think this younger generation who's grown up on like the same video games that we did, but which is even more financialized, where you're living in these digital economies and you're totally used to like playing the game of trading. Maybe they're not dealing with charts specifically, but they're dealing with the psychology of having to deal with like the real economics from a very, very early age. Man, it's just they're going to be drawn to it, and they're going to continue to do it, and it's going to turn into something that's cool and fun and useful. And yeah, that's just same vertical.
Yeah, there's clearly something there. I posted this yesterday. Bring it up on screen on X. I said,
Yeah,
"Am I the only one who finds it soothing to watch an order book for minutes doing its thing and matching buys and sells?" And I got like 35K views because I'm apparently not the only one doing
yeah,
this.
it's like a lo-fi background thing.
Yeah, someone exactly said that. Lo-fi music, an order book
Yeah.
open for hours at a time, and just watch this thing do its thing.
Mm-hmm.
Alrighty. With that being said, let's get into the second headline. MegaETH has introduced the Mega token, has announced some of the core features. The way I want to structure this is I'm going to give you a quick recap of what we discussed yesterday on the show,
Please.
and going to let you take it from there. So we got into the breakdown of the sale, how it works. We did go through all of the FAQ, answering or talking about all of the questions that were raised there. And then we got into this long article on the Reddit-like approach, the oversubscription part, the U-shaped thoughts. So all of that we covered. Obviously, this post introducing the Mega token came after the show, so we did not get into it. And I'm going to let you talk about this.
I'll tack on one FAQ thing, which is something that I've heard come up consistently for people with a question that I got the answer to in the background, and we're going to add it to the FAQ. So there is a withdrawal period. So like if you commit and even if you get allocation, we have a window in there where you can withdraw your funds. And some people had asked me, hey, what if I commit 10 grand, I get allocated, whatever, all 10 grand, can I take out 5 grand and like leave the 5 in, or what, like, do I have any flexibility there? And I'll just say it's a binary thing. So like if you're going to withdraw, it's a one-click full withdrawal. So that's the process. If you get in, everyone else is going to get their token. Like if you don't get any allocation, you get it back by the 5th. So it's a very short window. We're going to send that back to everyone. If you do get the allocation, we have to give everyone a window for the withdrawal, and it is 100% withdrawal. And what happens there is like, say someone gets 10% of the allocation, they're a huge person. That's actually impossible, but like it's just for easy numbers. If that person withdraws and says, I no longer want my allocation, that 10% is then dispersed amongst the other 90%. So like everyone else's allocation goes up, and like we'll adjust the thresholds because we just can't bring in new people. We just got to disperse it. So like that's the process there. So there's that. And then talking about the utility stuff that we released yesterday, and then I'll talk about what we're going to release today. So the utility stuff is, we talked about 2 distinct mechanisms that we are going to make useful for the Mega token. One of them, the first one, is the sequencer rotation. If you're familiar with how L2s are typically constructed, that's why we're like MegaETH is super performant. And Base is this way, Arbitrum is this way. Everyone says they have this one box that everyone can control. This one box goes down, things are in trouble, whatever. We're optimizing for speed and for latency being like how fast the chain responds. So sequencer rotation is our idea that instead of just having one box in Virginia that is the box that operates the chain and then settles to Ethereum at all times, then people in China forever are always going to have less latency or slower latency than everyone in New York every day for the rest of their lives, regardless of time of day. So we've talked about rotation and that like, hey, eventually there's going to be more than one of these boxes, these big boxes for us. The key thing for us is that we just will never have multiple that are building the blocks simultaneously that have to agree on something with consensus and like basically just replicating a layer 1. we will have this one big box that will go like, hey, the sun is up in Japan, so it's operating out of Tokyo. As soon as sun goes down in Japan and starts to rise in New York, for instance, that box in Tokyo becomes inactive. The box in New York or Virginia fires up, and that is the thing that is now building blocks, so that now the activity center of the world, which would be America, because it's daylight there, these traders, these firms, these whatever, now all of those people are closer to the thing building the blocks. So the time actually comes down, like the median time of transactions come down, and it does that for a little bit. And then as the sun rotates, like we'll constantly move the thing building blocks so that it's always as close to the activity of the world as possible. And those boxes are not always owned by us, right? Like, so us, the entity of MegaETH, did not have to be the person running it. We can have the crypto punks buy one and they're operating it for us, or Global Stake for Funky in the crowd. Like they have a box and they're running it for us, and they get to like take some of the profits from that. Maybe they do some back running so they generate income to that, because they actually have access to that information. And to get that position, they would have to buy the mega token, stake the mega token, show that they have good behavior, good uptime, good whatever. Some of these details are being ironed out, but like then they get the eligibility for building blocks, which is a profitable endeavor. They do it for a certain window, and then it rotates to the next person, and it's all dictated by ownership and staking of the mega token. So that's the first one. I'll stop there. Do you have any questions on like why that's beneficial? Or
yes, maybe break this down for the people in the audience, where this lower latency matters, so we can understand the economic value of that, basically.
Yeah, I mean, like the shortest answer is just that one, it's consistency that people can depend on. So trading firms can know with relative confidence that, hey, our order, whenever we put it in, will be sent to this box. It is 10 milliseconds away from our setup, and every one of our trades, our cancels, our whatevers can go and settle on chain in 10 milliseconds. And it's like they have a relative consistency to be able to place bids, cancel bids, do whatever. And then also just for consumer experiences, right? So whenever it's we've developed a method so that right now, like, people don't realize this. Whenever you send a transaction to the chain, for most people, the application that you're in, you click a button, sends a transaction to the chain processes its stuff, it sits there for a little bit, and then it sends back, the application's actually polling the whole time, saying, hey, what's the update? What's the update? What's the update? What's the update? Okay, my transaction's in, and then they get that back, and then you guys can move on, and then you guys can do the whatever. One of our methods is just that makes it like an API call. So you send it, and then you send the transaction, and then immediately the sequencer processes it and returns the receipt in the same transaction. So it's synchronous, just like an API call. But anyways, like to everyone, the user experience is you click the button, and now I have to wait for the system to chew on it, and then it comes back to me. So the distance, the latency of this thing extends that time. So like if you're playing Euphoria, which is a tap trading game, and you're in New York, we just want to make the median time that for the system to process the transaction to be as low as possible, and it's best to track where most people are alive and doing things, just to bring the median down, or the average, both.
Just to get in here before we move on to the second utility, that is something that you see in TradFi as well. If you look at high frequency trading firms, they use colocation services. They will have the service in the same data centers, stock exchanges, to minimize the physical distance that data must travel. They do everything to reduce latency, and to not only reduce it, but as you said, the important bit also is to have a consistent read of their latency and don't have that change throughout the day or throughout the week.
Yes, exactly. And that leads into what the second utility is. Recognizing that, right, there's you guys, so it's a consumer experience that is like benefited from the rotation of the sequencer, and just like then it leads into the next thing, which is professional entities or sophisticated actors that want to get even closer than just like in the same continent. They want to be literally in the same building. Right, I want to have my services that are 7 inches or in the same rack as the actual sequencer that is doing stuff, right, building the blocks. So recognizing that, for us, what we have done is we are taking both physical and virtual space adjacent to our big box, the thing that builds the blocks. And we're saying, look, man, if you want to be a high frequency trading firm, you're doing literally millions of transactions a week, a day, an hour, whatever it is, and you want to be literally a 5-foot fiber optic cable away from the thing building the blocks, you're going to have to stake Mega and compete against every other sophisticated actor trying to get in that same position, because we recognize this as high value real estate, right? So you take Mega, you bid in Mega. Because you do that, you get a spot next to us, or maybe you get an extra core within the actual sequencer itself. So it's like virtual landscape next to us, this high value, very close proximity distance. Yeah, and you have to acquire Mega to balance the benefits that you would get from that, right? So then you would want to be a good actor. Like, again, rules aren't totally in place, but like it gives us a little bit of leeway to try to identify good actors, bad actors, and kick people out and try to make sure that they're good entities that are actually doing stuff. It's very similar to how like layer one validator systems work, right? Like if you have all of these validators that are contributing, building blocks and doing things, it's fine. If one of them misbehaves, they get slashed, right? So it's very similar to that, except it's virtual space. There's only one block builder, and it's sophisticated actors next to this. And one of the things, like some people will hear this and they will recoil. They'll go, "Oh my God, you're just recreating TradFi. It's not the same stuff." Like, this is why we got to, that's why we have a bunch of random validators that are across the world. And my counter to that, sirs, is that you don't realize this is actually already taking place with our layer one systems, right? An example being with Solana, right? Solana has 509, actually it's like 950 validators that are randomly chosen around the world. And you're like, every single block builder that rotates every, was it 1.6 seconds, I think is the number, 1.2, is randomly chosen, moves to the next block builder. One day it's in Frankfurt, the next day, or next second it's in Uganda, the next second it's in New York, next second it's in Tokyo, whatever. So you can't co-locate to it, right? You're like, oh, well, this is not a problem in a Solana world because you can't predict the next place. And you would be wrong, because what happens is, and this is actually part of the reason we got this idea, is you know who doesn't do the random moving around? Jito. Jito is the MEV like it's the flash blocks slash eigenlayer slash like everything system in the Solana ecosystem, where everyone forwards their bundles to Jito, their transactions to Jito. Jito makes them or gets them included and forwards them onto the actual validator, the actual leader, the next person building the block. And the literal physical space next to Jito, which is hosted by Latitude, has been skyrocketing the last 2 years, because everyone is who's shitcoining is trying to get as close as they can to Jito, because they want to get their transactions to Jito. And Jito's even like, rumors they're partnering with Latitude, which is this physical place, to make sure they can have the most efficient meme coin swap, right? Like to whether it's, I don't know if it's malicious, I won't say it's malicious, but to like just to make sure that the most efficient trader in this very lucrative market that is the trader market on top of Solana. So like, this is already an existing thing inside of layer one ecosystems that have random block builders. People just aren't aware of it, and as a value leak. So we are trying to identify as many of these value leaks that take place in most of these systems, whether it's a layer one or a layer two, and we're trying to turn it into a revenue stream so that we're not wholly dependent on just transactions as the revenue stream for us, because like that's the thing that's quickly getting compressed and going to zero.
Gotcha. A follow-up question on that. Maybe it sounds a bit, sounds like so in your face, but why has nobody done this before? Is it the technical challenge to have the setup that you guys have built, or is it finding an economic model around that works and that's not solely transaction based?
I will say, I mean, Jito is doing it. Like Jito they physically partnered with this data center to do this stuff, to rent out that space. So they are doing it, and it is there in some of this dark forest with some of these ecosystems. I would say it's very similar to how everyone would look at stable coins, which is even more in your face, where like to this point, everyone's going like, yeah, wait a minute, bro. Tether's making $1 billion. Like, why are we letting this leak value to them whenever like we're the ones producing the value, right? The stablecoins is not a new concept. It has been, it's not only that it's been in our face, we've been in our face, and we've been talking about it as the singular PMF thing for the last, 2 years, and like seeing how good Tether has done. And just now people are starting to go, we should have our own stablecoin. So like, it's very similar to that, where this maybe for like sophisticated actors, this was in your face. For consumers, definitely was in your face. But we've captured now stable coins, which is in our face as a revenue stream. This, which wasn't in your face to the users, but was in the face of like people behind the scenes, we've captured that as a revenue stream. And then we have like additional mechanisms that we're trying to play with. So yeah, I mean, that's the broad answer. It's just like no one has like taken an opinionated approach to say, okay, we'll just bring it in-house. Like, we'll take it.
Yeah, fair enough. Fair enough. I like the answer. Anything else we should be watching out until the public sale is starting?
Yeah. Okay. So there's that. That's the retro for yesterday. I'll give you guys a breakdown of what we're going to discuss here in now an hour and 15 minutes ish. So the thing we haven't covered, which was in our Mika white paper, we got it approved and it's published on the site and people are starting to surface it, is the token allocation, right? Like where the mega token broadly has gone to and whose ownership is, whatever. So I'm actually going to go and pull it up to make sure I say it right. Where is it? Oh, here it is. So the breakdown of, and we'll have the pie chart in the tweet. The breakdown is 5% for public sale, 2.5% for what's called a sonar bonus pool, which is like a mainnet campaign, which you guys may have seen in the actual FAQ. It's something to come after this that'll be available to certain participants. We had the Echo round, which was 5%. We had Fluffle round, which is 2.5%. Team and advisors, that's us, 9.5%, which is less than the 15% that I just rattled off for all the community initiatives that we've done. Foundation and Eco Reserve, 7.5%. VC allocation is at 14.7%. And then there's a very large 53.3%. So over half of all of the tokens in the supply are being listed for what is called KPI staking rewards. And what that is we are going to detail at least a little bit like our thoughts on how tokens should be emitted into the ecosystem, where today everything is time-based, right? It's like, okay, 4-year vest, 1-year cliff, and then just like every week you're getting a percentage dumped on the market, right? It's like Arbitrum or whatever. Like it's just a linear unlock for everyone, and it just gets emitted in the ecosystem. It's all sell pressure, it goes down. We think that is incongruent with a healthy ecosystem, right? They're totally disjointed. It is, regardless if your chain is doing good or doing bad, those tokens are unlocking and people are able to just dump and it creates bad outcomes. So the idea here is that we have set up KPIs for ourselves and for the ecosystem broadly, and even outside, we're extending it to Ethereum, that once these KPIs are hit, like at the time of the KPI being hit, we allow for people who have staked Mega in that time period to receive the emissions, right? So an example of this would be, we do the sale. If you're unlocked and whatever, you stake your tokens, then let's say, like, just as an example, one of them is ecosystem growth. So we're trying to make it like as not gameable as possible. Let's just say we have 3 apps that each have cumulatively 500, or let's say 5 apps that cumulatively have 500 million in TVL, right? We've now hit a threshold that we think is useful for the ecosystem. If that's like something we want to excite, or we're excited about, with something we should celebrate, and that allows us to unlock 1% of the supply to everyone who's staked. And the conditions around the staking is mostly just like only people staking get those emissions, and it's dictated a little bit by your time staked. So like you need a minimum of 10, and then it caps at 30 days. So it's not like an egregious time window that you have to have so that you were staking. You hit those numbers and you're good. You get the emissions for it, and you can either like claim those tokens and stake them again to then compound and try to get like the next reward and build towards it. But we have those type of metrics for ourselves that'll be broken down into 4 basic categories, like ecosystem growth. Some of it's technical performance. So it's like us trying to make sure we drive the P99 latency of a median transaction to basically 0, right? So we have some goals for that. Some of it is our decentralization. So like the exit window that we want to have for the chain. Some of it is even aligned with the Ethereum ecosystem broadly. We think we want to make sure that we're connected there, and Ethereum's decentralization is something we want to index on and celebrate, and something that makes everyone excited. So we are going to have a few things there that are done in coordination. Like we won't get finer details of what those exact points are. We have most of them ironed out, but we're just not ready to publish them yet. But that's the idea. We just want to create this ecosystem and change the paradigm on how these tokens are unlocked, because if you're just unlocking another 5% because 5 days went by, as opposed to because like the ecosystem's actually healthy, the chances are price action on that is not going to be great.
I like that approach a lot, just to understand how it's working in practice. So mainnet's live, then the token will be live at some point. People are staking. Will the next goal, the next KPI, be public, so that maybe if it is a certain TVL growth,
we'll have it all like formally announced and published, but by the time that comes around, yes, for sure.
Will all of them be published, or like always just the next one?
Yeah, I mean, like it'll be hard to know what the next one to be hit will be. Like that's an interesting idea to try to like make it exciting for the ecosystem. So I actually may flip this back to the team, but my idea right now is just so we would just dump all the criteria so everyone can see what it is, and we're doing our best to make sure that it's not something that's gameable, or like the boop situation where it's like, oh, the KPI was you bond and you trade it for 40 million, whatever, and you literally just bought it, do it for a single block, and then you're home. Like we're doing stuff where it's like, okay, it has to be a TWAP price over X period time, and it has to be confirmed by 2 sources, and like all the fun stuff. We're trying to do that with most things. So I would imagine we want to be pretty clear and cut what those are, because like there's money on the line. But good idea. We'll float it back. Not confirmed.
I like the long-term incentive alignment of that, because ultimately, if I'm staking, I'm just waiting for time to pass to get rewards, and I don't necessarily care about anything else that token maintains somewhat stable, or it maybe even goes up. But in that case, if I know I get more tokens, if there's a certain amount of ecosystem growth, ecosystem health, TVL growth, whatever KPI we will use to measure that, then if I am actually a significant staker, I would have an interest to do something for the ecosystem to get more rewards coming my way. So I like the thinking of that.
As I say this out loud, like I already see what's going to happen. And what's going to happen is not only are you going to have these rewards, like say they're published and you have people staking for them, you could then have a prediction market on when these things are going to be hit. And you could then either hedge your position or try to double down by saying like, yeah, I'm good. Like, oh, I think this KPI is going to be hit in the next month. You bet yes on it to like try to amplify like your returns on it. Or like maybe you say no because you're like, man, I think like this position is just going to sit there for a while. I would like to make some money on it. So I'm going to bet no on it, thinking it's not actually going to be hit. Therefore, I can like make a little bit of money, and that allows me to continue to be staked for the X period of time. Like that's going to happen. 100% that's going to happen.
Yeah, it sort of becomes its own 2 protocol or 2 mechanism Kindle version of that.
Yeah.
I like that. That. Anything else you wanna say on the token utility public sale, or shall we keep it moving?
No, some other small stuff that'll come over the next few weeks, whatever. But I think that try not to blur the lines too heavily ahead of token sale. We'll try to. I just retweeted a really great tutorial on like what to expect on Monday, and a lot of thought process and stuff was just created by a community member. So that was good. I think we're going to just like focus on one, getting the announcement out today, and then making sure people are informed for Monday. It's going to be a little crazy. People are now like trying to say like, dude, 1 or 2 billion committed for 50 million in sales. It'll be a big day. We're trying to make sure that we're prepared for it.
Awesome. Very much appreciate the breakdown, the extra insights, the bit of alpha. We got 7 minutes left in the show. Let's keep it rolling, get into the last headline. And then we also have a giveaway to do, the Yeet giveaway. But last headline is that Fidelity is now offering Solana as a tradable asset to the brokerage customers. And the thing I wanted to look at, as I said, is how Fidelity is looking at Solana. They have this article published with the title, "What is Solana?" And I thought it's interesting to get this institutional $1 trillion money managing funds perspective, or financial services perspective on Solana. So of course they do break down what Solana is, how it works. The interesting parts then, how is Solana used? Like Ethereum, Solana allows third-party devs to build blockchain smart contract applications using its infrastructure. As a cryptocurrency, it can also be used to make transactions and transfer money. It's a popular blockchain, they say, for meme coins, NFTs, DeFi applications, and stable coins. And then they get into this part. I'm also going to be curious to get your perspective on, Brad. Speaking about the potential advantages and disadvantages of Solana. So the main advantages they see, obviously, it is one of the fastest and cheapest blockchains to use. They do compare it to Bitcoin, they do compare it to ETH, and speak how Solana fees can be fractions of a cent per transaction, where BTC and ETH tend to average to at least 50 cents. Fred, you want to get in?
It's so funny. This it's just the spectrum is so like I'm like the lens for which these guys can look is like this.
Yeah.
Like we would never compare these three chains as like
No, you
the
would never
things
say
competing.
Bitcoin compared to Solana in terms of like
Yeah, you're like,
transaction.
yeah, like what are you doing? Yeah, it's so funny.
You're looking at L2s if you want to make a comparison maybe to Solana. Next point they're making is they say maybe well positioned for future blockchain innovation. Basically saying that Solana supporters believe Solana's efficiency has already proven itself. In addition to the aforementioned stablecoin partnership with the major credit card processor network, has already become a go-to destination for meme coin projects, which require a blockchain capable of handling a lot of transactions very quickly. Also, from our perspective, kind of stating the obvious there. And then potential disadvantages, history of outages. They do mention that.
Ooh.
Also, that Solana isn't exempt from congestion issues. They bring up March 2025, where the network became exceptionally slow and essentially unusable for many users after a popular meme coin launch triggered a large surge in usage.
Conveniently left out is like the president's meme coin, but
We don't put the T name in there. Second point, it is too centralized ? Also speaking about the validators currently in the thousands, whereas Ethereum has over 1 million.
And declining.
Also don't get into more detail on that. And then again, as you said, they finish up by comparing Solana to Bitcoin and Solana to ETH, and kind of saying what the similarities and differences are, which, as we said, is not probably the way we would do a comparison like that.
Yeah, I think like just the thing to highlight for this is like we're entering a new phase of crypto and blockchain that is accessing a lot of people that just are not familiar with the ecosystem. And we had talked about this previously where it's like, man, I wonder if all of these people, there's particularly the Trump administration, where it's like, are they going to rerun all of the same conversation topics that we've had in the last 5-6 years and just like have to go through the educational journey that we did, where they're like, yeah, they're literally comparing Bitcoin to Solana, which is like, bro, we haven't had that conversation for so long, so long. Like that's long gone. That's the last cycle maybe thing, because like we had recognized what Bitcoin was for, we had recognized what Solana was trying to be, and there was a Solana Ethereum thing that kind of that fell away really quickly. Now it's Solana versus L2s, it's Solana versus these alt L1s, whatever. So I think for me, it's just recognizing that a lot of the talking points that we have already had are very, very likely to be very sticky and to be rerun in a lot of these newer circles. And it's something to be aware of, and it's probably going to dictate a little bit of capital flow. So that's
excellent point.
That's apparent for me.
Excellent point. Also, Coach in the comments is saying one chain versus another is so tiresome.
Correct.
Look, we got 2 minutes left in the show. Let's get to the giveaway part. As we said, we are partnered with Yeet. We are giving away $500 to people who have signed up under the Modern Market referral, are playing on our Yeet board. Yeet board this week is once again dominated by a funky 25K on the dollar in volume. J Miles up at 15K, then Lynn 12K. Have 17 people on the leaderboard. We did use some weighting to determine the entries for this wheel of names, and we are ready to spin the wheel and see who's going to win $500 this week. So let's do that. See very many funkies on this wheel.
Deserved. We got Kusho. Nice.
I think congrats to Kusho. $500 coming to you over the weekend, and B, I think it's Kusho's second win, if I'm not mistaken.
Damn. Funky just missed. Funky had the next two pegs after Kusho, so that's unfortunate. But we like a Kusho.
Funky, you came off mute.
Kusho second time, 100%. I think he was the first winner, in fact.
Yeah, Kusho is posting. Yep, second time in the YouTube comments. Well, once more, congrats. Enjoy the $500. And thank you to you, Brett, for co-hosting the show with me. Thank you to everyone in the audience for spending your valuable time with us. As usual, we are going to upload the episode to Apple Music, to Spotify podcasts. We're going to have clips coming out. And we're also going to be back same place, same time on Monday. So I wish you a great weekend in the meantime, and we'll see you guys back on Monday.